All right, folks, we're going to do a panel now, and I'm going to invite our colleagues to join us on stage. We'll start with Ron Powell, the CISO of Pacific Premier Bank. Ron is from Southern California, and Serge Jorgensen, partner in Crowe, a consulting firm. Serge is from Florida. So guys, welcome to sunny Israel. And then we have Yalon Pauker from PayPal. Yalon is the Senior Manager, Consumer Risk. And Admit Ivgi, Founder and CEO, A-Law and Tech. So Admit, welcome on stage. And folks, if you see this image, it says everything from bingo to Bitcoin, Elders Scam Watch. We will have later on a session, a panel focused more on scams. This one will also feature heavily, let's say, scam stories. But the real focus will be elders fraud, elders abuse, elders scam, and how they are all mixed. I'm Yuri from Refine. You probably know me from my BioCatch years or RSA. We'll start by talking about elders being the main target for scams. Is it true or no longer the case? I'm going to start with what Serge and Ron are seeing on their end. Serge, when you talk to your customer banks, are elders the main target these days for scams, or it's no longer the main sort of population that is being scammed these days?
There we go. Yep. Still a broad target for the scammers. I think it's still a vulnerable population. Seeing a slight increase in other areas, but certainly the elders remains high. And in different areas, I think it's changing slightly. It used to be just take over their account and log in as them. Now it's actually getting their direct and active involvement in the scams. So it's even more scary because people are showing up at their doors.
Ron?
Yeah, similar experience with that. You'll have maybe contractor scams. That's where it'll start. It could be fear and intimidation. We'll definitely see that of used as a mechanism, and then embarrassment is also used quite a bit because then they don't want to feel like they've been abused in that way. They fell for a scam of sorts. So the mechanisms they're all pretty similar, but definitely on the rise, particularly in the U.S. We're seeing quite a bit of that.
All right. An American banker survey we did was asking about 100 fraudsters in the US, various bank sizes. We talk about large banks, think about the Chases of the world, but also mid-sized banks, community banks, credit unions. What sort of scams are you currently experiencing, or actually your customers are experiencing? Elder scams was the top answer, but we also understand that it is mixed with many of the other types of scams these days. So it's not just an elder scam. It might have investment scam built in, or bank impersonation, or government impersonation, romance scams as well. So it's almost like saying it is still a very big portion of this, but of course, anyone can be scammed these days. Anyone in the room as well. We understand that AI is a main driver for criminals, for fraudsters globally. AI makes it scalable and very high quality to stage those attacks and go downstream. If initially attacks were hitting the larger banks because that's where the money is, right, the larger targets, nowadays you look at the US, for example, a lot of the mid-sized banks, regional banks, even community banks are being hit by massive attacks. They could be account takeover attacks, they could be scams, but it's no longer the big banks that are the target. Every bank, and in the US you have thousands of these. What we do see is a growth in consumer, let's say, attacks versus something that is written here, which is business email compromise. When you ask a specific mid-sized bank, look at your business email compromise and look at your consumer scams. Where do your customers lose more money? The answer is still business email compromise, right? This is where a business loses money to criminals because, let's say, someone from, one of the executives asked to move some money to a new vendor, or a vendor contacted, let's say, the commercial team saying, hey, we have a new bank account, so can move all of the money to the new bank account. Customers still lose a lot of money there. But in terms of the growth, it's certainly going to be consumer scams. And elders are, let's say, a big portion of that population. Serge, if you look at those sort of attack types, investment, bank impersonation, government impersonation, romance scams, what sort of trends do you see currently with the banks that you're working with?
It's been interesting that originally it was just a fairly standard account takeover. Now, like I said, it's moving towards the getting direct customer involvement and interaction. And so instead of the bank just defending against, hey, why was my customer's account accessed from outside the country or someplace they haven't been or something like that, now it's the customers calling and asking the bank to do something, and the bank is having to fight back against direct customer instructions. And you combine that with the embarrassment, sometimes even the customers are told what to tell the bank, and so that the first line of defense has gone away. And then we're also starting to see the fraudsters using other state regulatory agencies to develop a sense of legitimacy to the interaction. So if I register a business in your name with the state that you live in, and then call the bank and ask for something and note that I have this business registered, it provides that air of legitimacy to the bank, and they start thinking that I'm actually who I am because supposedly the state has accepted who I am. So it's getting more and more complex to respond.
Okay, Ron, what do you see on your end?
Yeah, very similar. We hadn't chatted about that, but that's definitely that's a common theme. When it comes times, especially from the elder abuse side, like it mentioned, to share a bit of a story. We've had experiences where someone will have a romance type scam, where maybe they're a widower, and they've had they've lost their loved one, and they wanted to develop a new relationship with somebody else. And that somebody else happens to be a very famous celebrity that person once was really important to. I've seen money move from accounts that way. Us as a bank, when we see that sort of thing, we spot this all the time, where we see trends talking to our peers. We have the ability to stop those transactions, whether the customer wants us to or not, and then we go through regulatory channels to be able to help manage that.
And around specifically elders abuse or elders scam, do you see any trends, colleagues in the banking sector talking about specific trends?
Yeah, I'll say, to take it first here, a lot of it's happening within the nursing home community. So from a contact list, I'm not sure if those are getting out or how those are being managed, but I've definitely seen an increase there if that's the population that's being targeted.
Okay. Let's move on to what controls are effective. If we look at other geos like the UK, Australia, many of those countries that have been facing scams for many, many years, I would say that two main sort of technologies emerge as very effective, and a lot of the banks are using those. One is behavioral biometrics, and the other is, let's say, AI-based detection. We actually did a survey with American Banker, and this came up as the number one and the number two technologies that the large banks are using in the US. The mid-sized banks, the smaller banks are beginning to think about using something like this. I'm going to ask you, Ron, inside a bank in the US that is currently not liable, like in the UK, for example, for reimbursing customers, right? And again, you can talk about generally what's happening with, let's say, the mid-sized banks. How easy is it to ask the senior leadership to fund something like behavioral biometrics, AI-based controls, to do the monitoring and things like that, which obviously costs a lot of money, where the person that loses the money is the customer and not the bank.
Yeah, certainly from a reputational risk, that's massive. Operationally, definitely in the same boat. I think generally, anytime I'm pitching budget, or if this happens to be in my world or somewhere crossing into it, is how does this product rely to our business strategy? What's our business strategy is to keep our customers happy? It's pretty easy to tie that back to it. If you have enough of these cases, then it kind of pays for itself at time. But definitely from the advancement of the fraud detection and prevention side of the house, I know amongst my peers, this is what everybody's talking about because of the escalation of the fraud scams.
All right. We'll shift gears into talking about specific attacks targeting elders. And I want to admit, maybe you want to actually either take this or go upstage and this to move, okay? Yeah.
Thanks.
All right.
Yeah, thank you everyone to come here and hear us. Thank you for inviting me. So I will talk about specific cases of elder fraud, like Wells Fargo customer, right? So in December 2024, not a long time ago, FINRA is a regulator of one of the financial institutes in US, awarded $3.4 million to the estate of a Wells Fargo client who was exploited by some of her relatives. What Wells Fargo actually did not do, they failed to stop uncharacteristic high-value stock transfer by an elderly client, ignored red flag of other exploitation, like sudden family involvement, large transaction with no business rationale, etc. And actually, the bottom line, and this is a very hard one for the banks and also for investment, did not contact the client's trusted contact, son, executor, across relevant accounts. If you all know or not, if you are 60 above, actually 80 or 80 and above, you have obligation in the US to provide a contact person, additional contact person for your account. So if something happened, the banks or the financial institute can reach to your trusted contact and check with him what's happened with your banks. Another case, for example, it's the gold bar scam. 75 years old client scammed in a gold bar scam. Gold bar scam is like someone impersonate to regulator, to enforcement agent and say that your bank, your account has been hacked and you need to do that and that, provide him the password and so on. FINRA ruled that Morgan Stanley failed to follow senior protection rules like large uncharacteristic withdrawal despite clear red flags and no trusted contact outreach. Again, the same contact. Advisor facilitated over $2 million in withdrawal even if after the client asked him to keep them secret from her son, who normally oversaw her finances. So here, actually the account owner asked from the banker not to contact the trusted contact. So it's interesting here how the regulator required the account owner to provide a trust contact, but then when he asked not to reach him, he actually listened to him and they failed to adhere with the regulations. So this is something that banks need to take in consideration. So this is the regulator, right, enforcement cases. But now we see a lot of legal cases regime where the victim themselves sue the banks or the financial institute for not adhering with elder abuse regulations. So for this instance, 80 years old Alice was contacted via social media by a scammer, right? Lured into crypto investment via a fake trading app. over 3 weeks, okay, she wired $720,000 from her saving and investment accounts. By the time the scam surfaced, almost all her life savings were gone. So, case now in court, she claimed, and maybe adjustment or not, unusual transfers. First of all, it's not from her checking account, it's from her investment account. So this is the first time that she do that. And also when she transfer money from her investment account, she transfer almost all her investment account, something that maybe 8 years old people does not do, or maybe, yeah, this is something that banks and financial institutes need to inquire. Also, and the second one, beneficiary daughter, again, was not notified. Okay, so again, we have a very pure line that the secondary contact, trusted contact of the account needs to be notified. In transaction that seems to be abnormal, even if the account owner asks not to do that, for example.
Admit, before you move on, so in the 3 examples that you shared, the commonality was elderly accounts, very, very unusual activity. There is a trusted contact, and the trusted contact is either not contacted, or the customer says don't contact them, and whoever it is that makes the decision is not contacting them. So specifically, look, we all know that scams are difficult to combat. Specifically with elders scam, elders abuse, those sort of fraud cases, there's a specific requirement that in many cases the banks, they would opt for convenience and not bothering the customer and not going the extra mile and do that communication with the trusted person designated, even if this would actually stop those sort of scam situations. The other thing that is happening, and I'm going to ask again the other folks here to chime in, a lot of the banks, especially the large banks, have put a lot of good defenses in place. We talked about behavioral biometrics, AI monitoring, and things like that in online transfers. So when the customer is engaging in an online banking or a mobile banking transaction, and it looks suspicious, they might be asked about this in real time. The controls are pretty good. Criminals recognize that by now, and often will ask the customer to walk into the branch, the physical branch. Hey, there are still some branches out there. It's not all online, right? And then the interaction is totally different. Now you have an elderly person, let's say, walking into the branch, the recognized branch that they always do business with, and they want to move a lot of money. And again, at that point, hey, there are some other people standing in line. Do you then stop everything and saying, hey, I need to contact the trusted contact before I actually release the wire? So the sort of additional requirement makes a lot of sense, but in practice, we see that it's not normally being used. Does this make sense to you guys? Like, do you see these sort of issues?
Yeah, I've definitely seen that amongst my peer banks. We typically see at the branch teller line, so you walk up and you're making a transaction. Behind the scenes, there's a checklist that how to spot these sort of things that are occurring. This is a good use of just use common sense. If you're the teller and you're working behind it, you don't have to have MFA, you don't have to do all this. Typically, it's the pattern that you're going to see is maybe if it's like a fear tactic, it could be, right? The person's demeanor is going to be changed, so they probably know this customer, they're probably local, and if their pattern of life changes, and this is weird, what's going on here? The branch tellers are actually really in tune to picking that up. And when that does happen, they ask some follow-up questions. Maybe they have a contact list that they reach out to of, hey, do you realize your mother's in here trying to move this money around? Or why is your mother trying to buy a new truck? This doesn't seem like something she should be buying, right? Probably doesn't have the need to move around farm equipment would be my assumption. So definitely the human in the loop process of that is still very effective.
You touched on something else there as well that I think is really important to pick up on. And you said that some of the bigger banks have those controls in place, and the bigger banks with the online protections have those online controls. Something that we're seeing right now is that the attacks are moving down into smaller banking areas. The smaller banks don't have the funds to develop those controls themselves, so they're going out to vendors and often picking the lowest cost vendor in order to implement some other control for them for online. And then when we're doing the investigation to figure out what happened, we're finding that the vendors don't have the log data that enables us to do the investigation. And where I used to be able to go to the bigger, more mature banks, and you would have that log data at your fingertips, and you'd say, sure, let's investigate this. Now, having to go to some third-party vendor, they don't have the same data anymore. So it becomes really important to ask those questions as you're building the technology.
Yeah, I would just add that the smaller banks nowadays in the US are under a sustained campaign. You have the largest banks, and then you have a very long tail of what is known as mid-sized banks, and then regional banks, and then community banks and credit unions. So it's a very long tail. Because of AI, the criminals are now moving downstream because they can do it automatically. They can stage attacks automatically. They can do bank impersonation attacks that start with automated phone calls. When the customer picks up the phone, perfect English, no accent, it's all driven by AI. And then the customer is being asked to go and log into their online banking, but they're given a link to a fake website, looks exactly like the real website. If one-time codes are asked, the AI will ask for the one-time code from the customer, and then game over. And this is a very, very large campaign that started around half a year ago. Every mid-sized bank, every regional bank in the US is under attack. This is not a scam, by the way, a scenario, because it's to collect the credentials and then log in and start transferring money out, right? Of course, elders are going to be a victim, but everyone is a victim. So it's not right, specific to the elders population.
Correct. And as Serge mentioned, that now banks or small banks ask for vendors to do the investigations and so on. So it's something that you need to be expert in, right? How to investigate, how to flag the abnormal behavior of elderly people, because it's different from young people, right? So so the regulators in the US try to seek how to minimize this effect, right? So they found out that as they do for every regulation nowadays, that the banks and financial institutes, and if we have here entrepreneurs that want to deal with open banking and payment provider systems and so on, so they found out that this is the entities that needs to be regulated and needs to enforce the regulation in order to minimize the scams. So we see now like mandatory laws, regulations in the US, and not only in the US, also but all over the world regarding AML, anti-money laundering, and anti-fraud detection rules and laws that actually asked the financial institutes to detect and report suspicious activities. So they can do this by automatic means. They can do this by human team that needs to review suspicious transactions, suspicious behavior, and continue the investigation. But either way, there is a specific required to invest money and efforts to detect and report suspicious activities. Also mandatory, but it's more per state. There are some states in the US that this is not mandatory yet, but most of them are. It is there is a requirement to temporarily delay a transaction when there is a reasonable suspicion. So it means that if some automatic system detect an unusual transaction or there is an unusual risk, then it's expected from the banks to hold the transaction and do further investigation to see if this is a legit or not. And Senior Safe Act, this is not a mandatory, but a framework, independent framework that financial institutions can implement by themselves, and it provides them immunity, like it's include employee training, transaction holds delay, trusted contact processes, consumer outreach, etc.
All right. So moving on, I think, Serge, you wanted to talk about this specific sort of attack, which you called the doorstep scam. You want to touch upon it very quickly, because we want to proceed to the next phase, which is the next stage, which is the PayPal thing, right? Okay, let's actually skip this one. But this is like, again, a physical element, right? It's not just things that are happening online. So beyond banking scams, of course we have romance scams. Romance scams happen in banking environments. They happen in PayPal as well. And PayPal reports things like romance scams, imposter scams, and also merchandise scam, meaning like the merchant side of things. Something that Serge highlighted, merchant sites are being created faster than detection algorithms can shut them down. And Serge, the last thing that I want to do on this slide is what is reasonable and who absorbs the leftover losses when we talk about these sort of scams?
It has been interesting with the advent of artificial intelligence. The merchant sites used to be manually created by fraudsters, and they couldn't really do it at scale. So once a merchant site had figured out how the fraudsters were creating the fraudulent merchant sites, they would be able to detect that in some algorithms and automatically shut the sites down. But now the AI engines are working around those fraud detections almost as fast. So we used to get a month or two of relief once we've identified a process and built a control for it. And now the relief is measured in days or hours. So the question is, as more fraudulent sites start to occur and merchandise gets transacted, how much control is reasonable, and at what point do the merchant sites just say, look, if you don't exert enough control on the front end, then you're still going to be responsible for buying the fake merchandise or whatever.
Right. Yalon, you want to come here on stage and drive this forward? Because I know that you have some interesting stuff for us. All right?
Cool. Hi, everyone. I'm Yalon. I have the pleasure of leading the scam risk strategy for PayPal and Venmo. Let's start with some common scams that we see on PayPal and then focus on the elder population. So common scams will be merchandise scam, which involves fake product sales, impersonation of charities, government, family members, friends, even hacking social media accounts, pretending to be friends, and also romance scams, which involves a fake romantic relationship, building trust, and then asking for money. One example that I wanted to share, this is Nikki, a 77-year-old woman that have been scammed out of £17,000 by a scammer pretending to be a young woman, which is interested in Nikki romantically. The scammer used AI and deepfake videos like this one, building trust and asking for money.
Good morning, Nikki. Hope you had a wonderful night. You know the reason of sending you this video to you, because I want to prove myself to you and hope this video proves you wrong with all the negative thoughts. You can see it's very storming weather outside.
Our mission in PayPal is to make sure that all users and transactions are safe. And safety, trust is the core of what we are doing, and this is why we have been investing a lot of time in the past few years to find a solution to this problem. But when trying to find a solution, we found a lot of challenges. First, users or victims tend not to report scam because of embarrassment, so we don't have a proper reporting or tagging to train models. And even if we detect scam, so what can we do? How can we stop someone who truly believes they want to send money, they are doing the right thing, and they are also being manipulated by the scammer? So let's start with a brief overview of the solution. So of course we started with the detection as any other risk solution. On PayPal and Venmo, we have both sender and receiver's account, which is different from banks most of the time. So we have three main entities to consider. We have the sender, the receiver, and the transaction. We focused on uncovering all available data sources, trying to build and define the scam pattern and basically distinguish the scam pattern from other types of fraud. So on the receiver side, we check if it's a trusted sender, what's the history of the sender with PayPal. On the receiver side, is it a new receiver? And also, what's the receiver network? Because we have a PayPal account for the receiver, we can also check the network. So let's say if we have a confirmed scammer sharing the same assets with the receiver, we can learn a lot from that. And the transaction itself. The transaction is basically the relationship between the sender and receiver. Is it the first transaction sent to this receiver? Do we see increasing amounts over time? Is it domestic, cross-border? All different types of data points. So basically billions of data points were used to train a highly accurate machine learning model that develops and improves over time, learning from different typologies of scam, and allowing us to take action in real time. So what action are we taking? We built an alerting mechanism designed to proactively warn users in real time before funds are sent. With this new AI system, the users will see one of these screens, and the level of warning will intensify as we gather more and more evidence of suspicious activity. The action ranges from completely blocking the payment, deciding ourselves that we don't let this transaction go through, but we have the user experience in mind. It's a good user, innocent sender trying to send money, so we also explain, we stop this payment to keep you safe, we want to protect your money. And we can also show a warning if the scam confidence is a bit lower. We can show a warning and then let the user decide whether to cancel the payment or accept the risk and continue.
Yalon, you show this to customers. What's the response from customers, and did you notice any difference based on the age of the customer, let's say?
So I can't share specific numbers, of course, but I can say that this control is super effective, and we have noticed a significant reduction in scam pressure. Since this panel is focusing more on the elder population, I have the breakdown by age, again, without the actual numbers, but just the high-level effectiveness. So we can see that the warning is mostly effective for people between the age of 30 to 50. The effectiveness is decreasing for the elder population, which makes sense. They are less tech-savvy, less aware of different scams. But for the elder population, we do have additional controls and extra protection. For example, we can block more transactions and make the decision ourselves instead of letting them decide. We also have dedicated teams reviewing some sensitive cases. We track cases where we see someone that keeps ignoring the warning again and again, and then we can escalate and take additional actions.
All right, so great work from the PayPal team. And I'd like to, oh, there's a question from the audience, okay. So the question, I think, I'll just repeat the question. This is more like merchant fraud or merchant scams, and you have situations where it's like a genuine sort of donation website versus something that might be either a scam, terror financing, and stuff like that. Any experience around this, Yalon?
So we do have some dedicated products for donations, and we have some other controls for them. So, like I would say something similar, but not exactly the same, and it's not considered under like the same, same controls that we place. This is mainly for the P2P product. So for the fundraising, we have a completely different flow with a bit of a different controls.
We stole a lot of time already, so if that's okay with you guys, we're going to stay here after we wrap up in about, I don't know, an hour or a little bit less than an hour. I want to welcome, and of course, one or two more questions. No worries. By the way, feel free to connect on LinkedIn, but yeah, there's a question over there. Okay, Yalon, transfers between people as opposed to payments.
So we do have dedicated flows for P2P transactions. I forgot to mention these controls are mostly for the P2P transactions. And the biggest portion of scam is in what we call P2P friends and family. It's not available in Israel, so that's the reason why you don't know it, but it's like BIT in Israel. And we are not providing the purchase protection for this flow. So it's like you should not purchase items using this flow. It's for friends and family, basically.
All right, yeah. Two more questions? Yes, go ahead.
There are no numbers because unfortunately I'm not allowed to share.
Yeah, but essentially the response rate, effective response rate from customers that are shown the warning, right? Do they stop the transaction or say, no, I want to proceed? Yeah, so Yalon cannot share the specific number. So maybe you can ask Yalon later on. Officially, he cannot give you the number, I would say. Okay, is that okay? Yes, final question. Yes. Yeah. No, because you can select several options. It's not just the only option that you have, right? So it's essentially saying, look, when you ask banks to kind of rank the attacks that they have, that's more or less what they're saying. Yeah, we're seeing this attack, we're seeing that attack. Yeah. It's more like the ranking of those attacks. All right, Ron, Serge, Yalon, Admit, thank you very much.